Hello value investors, thank you for joining me. Today I want to talk about Palantir. So Palantir has a few things that are very interesting here and we're going to discuss. So there's the macro picture that I think is worthwhile discussing, and then we're going to talk about its valuation. So before we get started, don't forget to check out my marketplace. I've got a price hike coming in 2021, January 21. The marketplace members have had a very strong performance in 2020, so I think that a price hike is coming, but you're welcome to do a totally free trial and see if you find stocks that suits you. So let's get started here. So a few different aspects are worth noting here. So Palantir has its guidance all the way into next year at approximately 35% year over year. So they're talking greater than 30% year over year growth rates, but just we can assume that that's about 35% year over year growth rates. So you're having a very large amount of visibility. This is not the fastest growing big data company, but there is enough here to sustain that very high mid-30 growth rates, and it's very compelling because once we get below that revenue growth rate, there's a lot of different things that I think are worth noticing. So before we get stuck into that, is that the company has these very long dated contracts. You can see here on the screen that the company is being dated its contracts for approximately 3.5 years. So it's a very large amount of visibility, and that should translate itself into a very high premium for the stock. Another thing that is worth noticing is that its Capex, for a $1 billion company, its Capex is approximately 1% of revenues. That's incredibly low. It's practically no Capex at all. So that company is going to be just growing its revenues, and that's just going to be falling to its bottom line. So here we can see this represented. So you can see that last year Palantir's had non-GAAP operating margin of negative 48%. This year, it's already gone from negative 48% to positive 25%. So in a 12-month period, you're just seen a leap. And that's operating leverage working on your behalf. So as it grows its top line, you can just see that cash piling up. But what I think is really important to consider here is that we're talking about a company that's making $1 billion in revenues. That's a very large amount of revenue for a company, and that's a very large amount of revenue for a software business. So another thing that I think is worth considering here is that if you can compare with its peer Splunk. So Splunk just reported last week its results, and its results, it was a company that I've been bearish about, and then I kind of got a bit neutral about it because I was just kind of taken away by this migration to the cloud, and I just kind of got distracted slightly, and then I would never took a position in it. But then when the earnings came out, the truth came out, and the stock plummeted 22% on a day. But in essence, we're looking at a peer here, and what we can see here is that its contracts are approximately kind of about 2 years, so they're shorter term contracts than Palantir's, and the company Splunk is being priced at 25 billion. So you have a company that in the best case, as we go against the very atrocious compares with this year, the company in the best case is growing its revenues at 25% year over year. And the stock is still priced at a very similar range as Palantir. So I think that investors can come to see Palantir's growth at 35% year over year, and they'd be willing to pay 27 times forward sales. I think that this is quite justified if you think about the quality of the management that you have here, and you think about the fact that it's already making non-GAAP operating margins. So you have non-GAAP operating margins that are profitable at 25%. You have a company that has a large amount of visibility. You have a company that's growing its revenues at 35%. And you also have to remember that the Capex is close to non-existent. This is a much better position than the company like Splunk. And both peers are very much kind of in the same space and being valued at the same rate, but one company is really doing quite badly. I know that Splunk has been around for a long time, so it has its very bullish shareholders, but I mean, I know the Palantir has just done a recent IPO, but I think that this could be a really big thing. Now, obviously, I should disclose that this is a stock that I do own, and it's another thing that it's something that we're just discussing here. This is not investment advice by any stretch of the imagination, but we're just saying that there's a company here which has basically an A-star roster of management and is priced at approximately 36 times forward sales, but it's growing its revenues at 35% year over year, has a large amount of visibility, and has close to no capex. So I hope you found this video useful. Don't forget to check out our marketplace. Don't forget the price hike is coming in January. See you soon. Bye.